Hey, how's everybody doing? Welcome
Hey.
back to another beautiful Sunday. That means another episode of Baggage Claim with Jaz and Charles, the only show where we teach you how to claim the bag, secure the bag, and most importantly, protect the
Protect the
bag.
bag.
Yes, I am Charles.
I am Jazz. We are here today, like Charles said, on this beautiful Sunday. We are cousins and we are also co workers at the
Absolutely.
Henderson Financial Group. Before we get into all this good stuff we've got planned for you today, let's drop the phone number. It
Mm,
is 305-825-1444. Give us a call. You're going to hear
yes.
some good stuff. You're
You
going to
know
want to
what? Let's
call
give it
us.
to them one more time. I want to make
Again,
sure they really
let's run
got
that back. Run
it.
that back.
That's 305-825-1444. We're going to hammer that home. You need to remember that. It's important.
Yes, today we have a really exciting episode. But
Mm-hmm.
first, I want to mention last week.
Address the elephant.
Yes, we have to talk about the elephant in the room. Last week, Charles was out, and so I was left to upload a pre recorded video. I'm not that tech savvy, and I did have a problem getting the
That's not a
video
problem.
up and on time. It was a mess, but it's there. So if you missed it, go back. We talked about the importance of life insurance, which is really good.
Absolutely. That was a really good one. And if you see two videos on the page, it's no problem.
Watch both.
Yeah, watch both. It's the same information, but it's just good to really take that knowledge in. Don't judge us. And I wanna, say something on my behalf.
Okay. So you left me.
I was safe. I was safe. I had my mask, had everything done, and I got tested before and after the trip.
Yes.
It was necessary, so just wanted to put that out there. That's
Yes.
fair,
Charles
right?
got COVID tested before coming back to the office, and that is responsible. Thank
Yes,
you.
yes.
All right. So today we are talking about
Real
real
estate.
estate.
Yes,
Yes.
yes.
A really exciting topic just because if you think about real estate, you're like, what is real estate?
Mm,
We hear it all the time real estate buildings, but like, what is real estate? Real estate is all around us. We're all a part of real estate in some sort of way, whether you are owning that building or you're paying rent for living in that building. There is real estate, someone owns it, someone's getting paid, there's mortgages. Yeah, real estate is everywhere.
absolutely. And it's the lot across from your house. It
Mm-hmm.
is that little forest area, those trees right by the highway.
Mm-hmm.
It's literally everywhere. And so, what we really want to do is let you know it's so accessible.
Mm-hmm.
You see all these properties, you see everything, and you think, well, I don't know about anyone else, but I always think, who owns this? How are they
Mm.
making money off of this?
Somebody
How did this
owns
get
it.
there?
Yeah.
It's everywhere.
Yeah, somebody owns it. Somebody's paying taxes on it. Somebody's making money off of
Definitely
it.
taxes.
Definitely taxes. But it's definitely right in front of your face. You're already a part of it. So if you feel like it's something really far reached or like, oh, I want to be inside of the real estate investing world, but it just seems so hard and impossible, you are already a part of it. You just got to get on the right side of it.
Absolutely. And so today we want to hammer home rental properties. That is what this one is all about, investing in rental properties. It's so important.
Yeah.
It's so very important because it has so many benefits, more than just bringing in that income every single month. It has a lot of benefits, and it's a great way to build wealth.
Yes, I think as an investment in itself, it's a really great starter. If the stock market is not for you, or if you're maybe a little less risky, something like real estate is forever, and it's definitely tried and true. Most billionaires actually have acquired their wealth through real estate. They
That's real.
started in real estate. That is a real fact.
Oh, dropping dimes.
You can go with anything I say.
Man, that's some good information, and it's true. That is somewhere where you could start. How you doing, Miss Ward? Good to see
Hi,
you.
Miss Ward.
Hello, hello. But yeah, it's a great way to start, and it's so accessible,
Hmm.
so accessible. So we really just want to break it down for you. A lot of people are in real estate, like you said, but they aren't necessarily on the rental property side.
Hmm.
They are what we call the debt cycle. That's what they're in.
Mm.
That debt cycle, you know how it goes.
I know how it goes. You go to
College,
college, then you
mm-hmm.
get your dream job, then
Gotta
you
get
find
it.
your dream girl or guy, then you have your dream wedding, then you
Mm-hmm.
find your dream house, and then you have 2.5 kids and a dog.
Don't forget the dog.
Don't forget the dog because the kid's going to beg for a
Oh,
dog.
for
And so
sure.
if you think about all those things in this cycle, it's kind of all expensive. What is the average wedding
It's
cost?
extremely. The average marriage costs about $30,000.
The wedding costs
The
$30,000.
wedding, and that's not taking into account the college loans, student
Yeah,
loans,
yeah, yeah.
um, the cars, the
Yeah,
house,
yeah,
you
yeah.
starting off in the hole.
Yeah, and it sucks because like we have this idea from children, like being children. When you grow up, you want you want the education. Even if you didn't go to college or whatever, you landed your dream job and you're excited. Now you want all these expenses and it feels good. And this is not to come down on you if this is your life right now. This is letting you know it is a vital time to break
Absolutely.
the cycle, because what comes next after you've got this whole beautiful picture, you just start wanting more and more. Now you want a nicer car and a bigger house and a bigger yard, and like that's okay, but you don't want to just be financing everything because you're in that financing cycle.
Exactly. When you want to get that new car or the new PS5 that came out, I know grown people who love to play games. There's nothing wrong with that. You don't want to have to get it on a credit card.
No, yeah. Oh, yeah. Don't put
It's
your
funny.
PS5 on a credit card.
You
You're
don't want to
like,
have to get it on the credit card. You don't want to have to save up for vacations. It's still good to budget, but
yeah.
you want to be in a position where you can get these things, and you want to be able to have your assets pay for it. You don't want to just have to wait for on the
Mm,
job when you get those 2 weeks. What it really gets you is freedom. That's what these investments are
yes.
all about. It's
Yes.
about getting you freedom.
Freedom.
Rental property is another avenue for that.
Yes. You said something. You want your assets to pay
Oh
for
yeah.
your fun and your leisure, not your hard earned money. And it's just going out every time you want to do something fun. So, we feel like the best way to really express the importance or even the benefits of a rental property is to give you a real life example.
Oh yeah.
We could sit here and be textbooks with microphones, but we feel like it's best to just really teach through real life examples.
Absolutely. And so what we're gonna give you is a real one. It's actually our client here at the office. They said we could tell the story, but we don't want to put their name out, so we'll call them Person A. Now it's a long story, so tap in, please.
Stay
Just
with us.
stay with us. It's really good. Person A, everyday person. They got a 50,000 a year job. They love what they do, but they really want to get more freedom. They feel
Mm,
like they can't really attain that just from their job.
mm,
So, all right, they're thinking, how do I get more money? What they decide to do, they keep their full-time job, but they get a rental property on the side.
mm,
So it's a single person house, and they have a tenant in it. So what they're doing is they own the house and they're paying the mortgage on it, 1,200 per month, but they have someone living in the property, a tenant, and the tenant is paying them $1,500 every single month in rental income.
mm,
And so they're paying 1,200 per month in mortgage. They're bringing in 1,500 per month. They're netting 300 every month. That's
mm.
pretty good.
That's just $300 that you didn't have to sweat for that month, just in your
Hmm.
pocket, free. And that's really, it seems good, but
Yeah.
maybe for some people it's like just 300, that's
The
it.
big ballers.
Yeah, the big ballers might be like 300, that ain't nothing. But let me tell you something else, it gets better.
Hmm.
Aside from that $300 income that you get for doing nothing, the IRS, instead of, okay, so let me say, someone who makes $50,000, just like person A,
Hmm.
but does not have an investment property. I'll change the words: investment property, rental property, same thing. Someone who doesn't have that investment property and they make $50,000 a year, they're getting taxed every year. Uncle Sam is knocking at their door.
Taking up.
They're getting taxed on $50,000 income. That's what it says they're making, and so that's what they're getting taxed on.
Okay.
Now, someone like person A, because they've been paying a mortgage all year, and really, if we go back, they're not actually paying the mortgage. The tenant is paying the mortgage. The tenant being the person living in that home is paying the mortgage. But the IRS, Uncle Sam, whatever you want to call him, is gonna say we don't we only talk to owners over here. So it looks like the owner has been paying $14,400 all year. That is the sum of every month paying mortgage. So you add that mortgage up for the whole year and you're at $14,400. Now the IRS is going to say, since you've paid us that all year, you've paid your mortgage, we'll deduct that from your income. And now, instead of taxing you on $50,000, we'll just tax you on, what is it, like $36,000? 35,600.
35,600.
Yeah, we're going to tax you on $35,600 as if that is your income. And if we go back to basic math, when you take a percentage from a larger number versus taking a percentage from a smaller number, you see how it happens. It's a smaller number. You're getting taxed on $36,000 versus getting taxed on $50,000. That's a big break right there.
Man,
That's
that is
thousands.
huge. That's huge. And I like that we it's just good information. This is really good information because this is giving insight into how America works. So some people may feel, all right, it's not fair that the renter is the one who's actually paying $1,500 a month, but they get no tax deductions on what they're paying.
You're not an owner.
But the owner is getting the tax deduction off of the renter's money. That may not sound fair, but that is how America works.
How America
Business owners, property owners, people who are contributing to society, they are the ones who get most of the benefits, unfortunately, but that's what it is. And it doesn't stop there. So, if you're following along, $50,000 a year is what they make, but they get that deduction on the mortgage. So we bring them down to $35,600 a year. That's what IRS is recognizing. Well, there's something called depreciation that they also get to take as a tax deduction. Now, stay with me for this one. And this is a lot of information. So depreciation, that is when something loses value, right? Think of it like a car. Everyone knows when you get a car, as soon as you drive it off the lot, it loses its value, right?
Yeah, straight down.
Depreciating asset. Well, a house doesn't work the same way. It could actually go up in value, but you get to take what's called depreciation on the house, depreciation expense. So every single year you can say, all right, my house depreciated this much. I need a tax deduction of this much. So in this case, person A, they're going to take a depreciation expense of $10,000 for that year. So the IRS is going to say, you know what? You made $50,000. You get the mortgage deduction, $35,600. Now you get to take a depreciation expense, and that brings your income down to $25,600 for the year.
That's amazing. So instead of being taxed on, so person A with this rental property and this depreciation and all this, now they're being taxed annual taxes. They're getting taxed on $25,000.
Yes,
and
yes.
the other person who doesn't have a rental property, still making that $50,000, you're getting taxed on the full $50,000. And even something I want to say, it's really interesting because in the books of the IRS or whatever, whoever wrote these rules, decided because we love owners in America, because we love those entrepreneurs, we're just going to make it so much easier for them. So they say in the books that real estate is a depreciating asset, and you can mark it on your taxes as, oh, it's depreciated, but that's not actually true. If the housing market is up, you're going to get to sell that house for whatever the market says it's worth. So in the books, even if that year your house value went up, you can still say, oh, it depreciated. It's a depreciating asset. And they're going to give you that break just because you're an owner, you're contributing to society, they mess with you, they like you, and you get the breaks.
Isn't that nice?
Yeah.
It's nice if you're on the right side of it. And that's why we're giving you this knowledge. And, the benefits don't stop there. When you really think about it, you're getting these tax breaks. This all sounds great. But this is an asset that's literally paying for itself. Literally, you're paying $1,200 in mortgage, but you're bringing in $1,500 a month. It's paying for itself. You know what? Make it hit home. Jazz. I like what you're doing. I like your style. I see you work hard.
Thank
You got your braid in. It's beautiful.
2 braids, one on both sides.
Yeah. I love what you're doing. I want to help you out.
Thank you.
I want to give you a car. It works. It runs. Everything is good. All you have to do is pay for the gas, keep it up, in terms of upkeep, but I'm going to pay the car payments on it. Would you take that?
You're going to pay my car note every
I'm going
month?
to pay your car note every month.
I'd be a fool not to take it.
You would be
I'd
a fool.
fool.
This is exactly what happens with a property. Someone is paying off this asset for you, and you're getting all of the benefits every single day, every single year. Who would say no?
Yes, especially those homeowners out there. Can you imagine? Someone's like, I'm just going to pay your mortgage and you'll get all the tax breaks for it. That's insane. If y'all homeowners, So, and I feel like at this point, we've convinced them.
Yeah,
If you
but
don't
you know
wanna-
what? I'm going to give them one more.
Oh, there's more.
There's more.
Okay.
People often think about, owning a property. I got a full job. I got kids at home. I'm married. I don't have time for that. Well, you actually don't have to, you don't have to be active, right?
No, you don't. No, you can get a property manager. And a property manager, you pay them as little as 10%, and they will handle all the annoying things. You know how tenants call. If y'all are tenants,
boy.
you know how you call the landlord. It's the landlord.
Unclog my
the
toilet.
broken. It's the landlord. The window broken. And can you imagine, like, you have a regular job and you just got this investment property because you want some side money, and they're calling you about that? So this is when you would get a property manager, someone to come in and and handle all those little things, you pay them 10%. If you're getting $1,500 in rental income, 10% of that is just $150, and that's a little bit to pay for peace of mind.
Absolutely. But you know what though? I think it's all about who you know, not what you know.
Yes,
They don't know property managers.
we
Who
know
can
property managers.
we do know Give us
Yes.
a call, 305-825-1444. Let's do it one more time like an infomercial.
Okay.
That's 305-825-1444. Give us a
Yes.
call.
We got property managers here. We can help you out with that.
Mhm.
I feel like, okay, so now I feel like we've definitely convinced them.
Yeah.
Like, if you don't want an investment property by now, I don't know. If you're just tuning in and you're getting here, rewind that back, go watch, because it's really good stuff there.
Absolutely.
All right, so for the viewers, for the watchers, it sounds like a really good idea to get an investment property, but I'm sure what's ringing in their head is like, how? How do I
Yeah.
get there? What do I need to qualify? What do I need to step into this world? Because again, when you don't know, things seem so out of reach, but like I promise you, it's so much closer than you think.
Absolutely. That's fair. Um, you know, we'll take it back to the first episode. First, when we talked about credit, that is the first thing that you're going to need. Build up that credit score. That is so important.
So important in America.
It's like your life GPA or a report card. It's going to follow you wherever you go. Every time you need a loan, people are going to look at that. So make sure you get that credit up. That is the first thing that you need. On top of that, you need a nest egg, right?
You need that nest egg. Again, that's back to baggage claim episode. What was that, one?
I think that's one.
One or two. Go back and watch it. The nest egg is always going to come up. Any investment we're talking about, you're going to need something, because in this world, you can't get something for nothing. So you come with your nest egg and you can start making some money. So when we say nest egg, now you're probably wondering like, well, what is a nest egg? How much of a nest egg do I really need? And that just depends on what you are looking to do, the moves you're looking to make.
Absolutely. So, that's what you'll need. The next step, how do you go about getting it? Well, what you'll need is financing. That's what most people need.
Yeah.
Now, some people like to get their, properties all cash.
Oh,
That's what the rappers brag
that's
about.
what the rappers do.
Got the house
Cash
full
money.
of cash. It sounds nice. But, most of us aren't in that position. Let's take,
Most of us are not rappers.
South Florida, for instance. These prices are high, right?
Yes, real estate is high here.
I don't know too many people who have $250,000, $350,000 just laying around outside of their retirement account. Do you?
No, and even if you did, it wouldn't be a good idea to use your own money, because we are all about leverage here.
Absolutely.
Go back in the previous episodes if you want to know a little more about leverage. But yes, we definitely don't recommend paying cash for your whole house unless you're a rapper. So you definitely have two primary options. There are many options, but these are the main ones people usually work with. You got a conventional loan and you got an FHA loan. That conventional loan, that's what we call the fancy loan. That's for if you have 20% you can put down. So if that house is, let's keep it very simple math here. Here on Baggage Claim, we are talking to you like 6-year-olds. That way you can digest it and pass it on.
Super simple.
So let's say that house costs $100,000. For that conventional loan, for you to put 20% down, you'd have to have $20,000 cash. For some people, that's absolutely nothing and you can do it rolling with the big boys. Some people, that's a lot. Maybe that might be all your money you got saved up, so you don't want to go that route. But if you are fancy enough to go the conventional way, it's pretty good, because the mortgage companies give you a little more leniency, you got a little more freedom, and that percentage that you put down, that 20%, that becomes your equity in your home. So you're starting off as a homeowner with 20% equity in your home, which is not bad.
No, not at all. That's pretty good. And so, that's why we call it the fancy route.
Fancy.
That could get a little expensive for some people.
Yeah,
so
absolutely.
let's say you're in a position, okay, I don't have 20% to put down, $300,000 house, that's $60,000. I don't have that. Well, there is another option instead of conventional loan. That would be FHA. So FHA loan is something else where you can put down as little as 3.5% on a down payment. Let's give you a real life number. If a house costs $100,000, you can literally put down $3,500 and own it.
And you can have a home.
That's beautiful.
That's beautiful.
And so, what does that entail? With the FHA, there are some rules and regulations, of course, because, everything has its pros and cons. You're only putting down 3.5% minimum. Of course, you have to have the good credit and the nest egg. But on top of that, they're going to charge you a higher monthly payment. There's something called PMI, property mortgage insurance. They're going to tack that on to your monthly payment. Why? because you're putting so little down, you know? You have to think from their point of view, from the bank's point of view. Does that make sense?
Yeah, from their point of view, they're like, okay, so you couldn't go the conventional loan route. You're not that fancy. You're doing this 3.5% down. It must mean you don't have as big of a nest egg. So it's kind of a little risky to give you a home and come into this contract with you, because what if one day you have a problem and you can't pay us? Now we're stuck. So what they do is they get that PMI added onto your monthly payment. That's your that's making your mortgage payment a little higher, but it's really insurance. It's insurance, and it's saying that if you can't pay, then we'll have someone pay for you. And this insurance that you're paying every month, they'll pay. And so it's really like a get out of jail free card for the mortgage company. But for you, it's kind of like, oh, because those monthly payments are a little higher.
I mean, definitely. You know, it's actually a government program, so the government is going to pay the bank for you. So, you know, FHA, this is something where they're actually encouraging people to do this. You know, it's not necessarily intended for rental properties, but, you know, they don't discourage it at all. In fact, it's like something that a lot of people do. So this is something where you want to get on. Don't let that PMI discourage you. The government has it all for you. And of course, there are other caveats, but, you know, we just want to let you know FHA is a really great route for rental properties.
There's one other thing, though, I want to mention about the FHA. You have to live in the home. So I know we're talking in terms of rental properties, and you're thinking like, well, I'm not trying to get a roommate. But there are other options. They have duplexes, triplexes, quadruplexes, quadplexes, quadruple plexes. They have quadplexes, and you can go up to 4 with the FHA. And so how this would work was if it's a duplex, you live on one side, you qualify for this FHA loan, and they say, okay, you have to live in the property. So you're like, yeah, I'm gonna live in it. You live on one side, and the other side, you put your tenant in there. You have your tenant paying the mortgage. You're just collecting that money, and you only have to live in it for a year.
Literally.
So after a year, you move out, put somebody else in there. And you know, this example we gave you with person A was just $300 net they were coming into their pocket with. But honestly, we've seen many cases where people have rental properties and they're getting way more than $300 net. And if you're doing a duplex, a triplex, a quadplex, those are just more tenants you can throw in there, and you can charge them the same amount.
Absolutely.
It's just cash money.
And it's only for 1 year. That 1 year is going to fly by. Yeah, it's not that bad, but let's just say, you know, you don't want to live there for 1 year. You're someone like, okay, I don't really want to live there, but I still don't have the 20% to put down. FHA can still work for you. The reason being, you don't have to put the 3.5% down. You know, if you don't want to live there, you'll probably have to put a little bit more down, maybe 5%, 10%, 15%. But that's still better than 20%, right? You know, so you don't have to live there. What you can do, you can still get it on FHA, put a small down payment, get that duplex, get that tri, get that quad, whatever you want, and then just get that cash flow coming in.
It's accessible to you. It's
Absolutely.
possible. Get online, start looking at how much these homes cost, start looking at the prices of homes, calculate what that 3.5% would be down if you're trying to live on the other side. If you don't want to live there, calculate what it would be to have a 10% down. Even if you want to be fancy, if you got the money in the bank, calculate what it would be for that 20% down. It's definitely possible for you. Real estate investing is not just for the super wealthy or the rich, because this is how a lot of them have come up. So this is your chance.
We know so many people that started off just with one rental property, you know, an FHA loan, living on one side, renting out the other, and then now they own what, like 5, 10, so many properties. So
Absolutely. Oh, and one thing I want to say about the PMI insurance. If you're paying that PMI insurance and you don't know if you qualify to get it off, because a lot of times what they won't tell you like, oh, you're good, you don't have to pay no more. They're just going to keep collecting that money. So give us a call again here at the Henderson Financial Group. We can chat with you and let you know if you qualify to get that PMI off of your monthly mortgage payment. This is for the people who have primary residence. A lot of people do the FHA for their primary residence as well.
Absolutely. And that number is 305-825-1444. Once again, like an infomercial, that's 305-825-1444.
Give us a call.
Yeah, let's give a little shout out real quick. Hey, how you doing, June? I hope you're doing well. Hey, Mr. Ingrail, great to see you, sir.
Yes.
Yeah, you know, that was a lot of information.
It was a lot of information.
It was a lot, but it was good info. And we got so much more coming for him, right?
Yeah, absolutely. There are a lot of different ways that you can invest in real estate. This episode, we really wanted to hammer in the what I feel is like the most simple way.
Yeah, rental
The
property
rental
is simple.
properties. It's like baby steps right there, and it gets better. And Charles and I are going to be here for a while.
Every week,
Yeah.
we'll come back to you, talk to you about flips, about buying land, about all of these different ways. Wholesaling, that's something that if you're into, the fast money, just so many different ways you can get into the real estate space. We just wanted to start off nice and slow with rental properties. But, real estate is just like asking, what is the stock market? What is real estate? It's so many
So
different ways
much.
you could look at it, right?
Absolutely. You said something I want to touch on just a little bit,
Okay.
You said buying land. That's my favorite because I just think that's a phenomenon.
Yeah.
Think about all the places that gentrification is really booming
Oh.
in, and can you imagine the people who had land, just a lot, just literally land in one area, and now that area is popping. They're building coffee shops and like little parks and museums, and the price of that land has skyrocketed. Now you can sell it, and you didn't even have to do nothing. You don't have to deal with no tenants. So I just think there's so many awesome ways to invest in real estate. There definitely is, and we will chat about them.
I'm glad you said that too. You hit a nerve when you said gentrification. Like,
Oh,
you going real life.
yeah, real
Well,
life,
if we
man.
go in real life, there are so many real life cases where buying land works. For instance, something that's happening right in front of our eyes. A lot of our audience, they're in South Florida. Florida is one of those states where we don't have state tax. So a lot of people would love to live here. But, a lot of big corporations are in California or New York. Well, with COVID and what's happened, organizations are realizing, we can have our employees actually work from home. So a big trend that's happening, a lot of tech companies are leaving Silicon Valley and they're going to Texas, which has no state tax, and they're coming to Florida, which has no state tax.
Oh, so what you're saying is they coming.
They coming.
Coming.
And
You want to get in early.
You want to get in. You
Get
know
your
you got to
nest
look
egg.
forward to the future.
Get your nest egg ready so you can be a part of these conversations. You can start investing early. You will not regret investing early. Can you imagine your 40-year-old self? You're going to be thanking your 20-something-year-old self. And even if you're already 40, your 60-year-old self will thank your 40-year-old self.
Yeah, young man or young woman. Only 40. That's not bad at all.
40 is the new 20.
Is it? No wonder why my knees so bad.
All right.
That's everything for you?
Yeah, that's everything. I got everything.
Okay. Well,
thank you guys.
Thank you for tuning in. You guys
watching.
have a wonderful Sunday.
Thank you.
Bye.